In today's video we are going to be looking at a fractal flow trade in the euro-dollar 5-minute chart. I will try to follow the steps of the fractal flow methodology in an organized manner, starting by the amount of price information we have in the chart. In one of the videos I posted recently in the channel, I laid out a rule that you should not have more than 150 to 200 candles on your chart. There are a few reasons for that. The first reason is that the market has a short-term memory, meaning that price does not care too much about what happened too long ago in the chart relative to the timeframe you are trading. The second reason is that in order to trade well, we need to produce a high-resolution analysis of the market in question. The prerequisite for a high-resolution analysis is that we must be able to see the big picture and the small details of candlesticks simultaneously. In this chart I have about 100 candles in sight, but we have all the information we need to make a trade because there are many things going on here already. Beyond that, if you try to make sense out of too many things simultaneously, it will be like trying to juggle 20 different balls at once. It's not difficult to see that trying to juggle 3 balls is still hard, but it's a lot easier than juggling 20 balls. With that out of the way, let's begin the analysis. The first thing you should do in every analysis that you make is mark the highs and lows on the chart. Don't worry too much about what the highs and lows mean for the moment or which of the market players is in control. Just mark out the price extremes in the chart, and then we are going to move on to the next step. In this chart I marked the highs and lows using short and thick black lines, and I also numbered them from 1 through 8. From number 1 through number 3, we can see the market making lower highs and lower lows. This means that for this particular portion of price action, the sellers were clearly dominant because they were able to display more power than the buyers. That should be crystal clear to you, otherwise you will have difficulty seeing the other details of the analysis. One important detail here that goes beyond simple highs and lows is where movements actually begin and how they develop. In the market vector between numbers 2 and 3, we must make 2 important observations. The first is about where the sellers actually took control of the market, which is different than pointing out the high number 2, and the second is how the market vector evolved from number 2 to number 3. If you observe carefully, high number 2 is the absolute extreme of where the sellers took control, but notice that after high number 2, there is still a battle going on before price goes down. That means that buyers and sellers were still struggling with each other, and the decision to go down was not yet solidified. The moment where sellers really took control of the market was where I marked the point of ignition in the chart. Notice that this level is different than the absolute high number 2. I marked that point because that was where price really started to go down, and it didn't really stop until the formation of low number 3. The second observation we must make is to how price evolved from the point of ignition onwards. This is what I like to call organized behavior because each and every candle forms a lower high and a lower low since the point of ignition until the absolute low number 3. That's something interesting because price usually does not behave in an orderly fashion like that. It should be clear to you at this point that high number 2 is our solid market structure, and the point of ignition is where the sellers are likely to be in the future. Until price comes back to that level, there is no point looking for short trade opportunities because we might risk the possibility of being early in our judgment. In the meantime, we can look at how price evolves upwards. Just as a parenthesis, observe that low number 3 is finalized by a clear fractal candle, which is always something interesting to notice in the fractal flow method. With the finished low number 3, the sellers from number 2 exhausted their accumulated energy. At this point the buyers who have been accumulating energy will start to exhaust this energy. Between number 3 and number 8, a few interesting and confusing things happen. One of the problems of trading is not just choosing the correct side of the market. It's also a problem to decide when and where you are going to trade. The next bit of the analysis illustrates that in a very clear way. From number 3 to number 6 we can see the market creating a higher high and a higher low. Be careful because that does not mean we have an uptrend yet since high number 2 has not been violated. The confusing bit of price action happens in the market vector between number 6 and 7. This portion of price creates what we call an expanding pivot, which is when a higher high is followed by a lower low or vice versa. This is a problem because it confuses traders about the standard definition of uptrend and downtrend. If you follow this channel, you probably already know that markets suffer a great degree of interference from large traders. Things like expanding pivots and whipsaws are usually the work from these market players who do this on purpose to maneuver retail traders. One of the things we have to understand about market makers is that they use reverse psychology. In other words, they induce people to go into one direction with the sole purpose of making them go in the opposite direction right after. There are complicated reasons for this, and all of them will be covered in the Market Maker Strategy video course that will be released at the end of this month. For the time being, you have to understand that things like expanding pivots and whipsaws are meant to confuse you. Apart from the fact that market makers are subtle in their actions, they cannot hide completely, and they certainly leave fingerprints and signatures. Take a look at the market vector between 6 and 7. Notice how perfect this portion of price action is compared to the rest of the chart. Every candle descends the market a little bit. All those candles are relatively the same size, and all of them create a lower high and a lower low. When low number 5 is broken, this behavior stops, and price starts to rise again. There are specific motives for this, but that's a conversation for another day. The point here is that if you're not aware of these signatures that market makers might leave, you will think that sellers are now in control of this market, and you might try to go short in moments like the red line that comes out of high number 6. One of the things you can do to avoid this sort of thing is to wait candles to fully form. Never make a trade in the middle of a candle unless you know what you are doing. After number 7, price continues to march to the point of ignition that we marked in the beginning of the analysis. Notice how these market makers create confusion and complexity in something that was supposed to be a lot simpler. In number 8, price finally arrives again at the level where sellers took control of the market in the left part of the chart. However, that's not enough to make a trade. We have to observe how price behaves around this area to make sure these sellers are still here to help us. There are 3 things that should grab your attention in number 8. The first and most obvious one is that price tests the point of ignition 3 times with 3 upper tails that imply there is some selling pressure in that red line. The second thing, and the less obvious one if you are not a fractal flow student, is the fractal candle number 8, which also happens to be one of the candles that tested the selling pressure of the point of ignition line. The third thing is that while all of this is happening, we find ourselves within a simple reversal divergence marked by the short and thick blue lines in price action and in the relative strength index. Observe that we have a subjective context built around the simple observation of how highs and lows interact, and we have objective and technical tools that suggest where we should take the trade. The short position you see on the chart was triggered right after the fractal candle number 8 was fully formed. In other words, I pulled the trigger at the open of the candle marked with the green arrow pointing down. The stop loss is logical, and it should be placed above high number 2 because that's the extreme that these sellers are willing to go in a last resort. The target should be roughly around 3 or 4 times bigger than the stop for mathematical reasons we do not have the time to dive into right now, but for the time being, the low number 3 looks like a plausible target. Let's see how this trade develops. Here we can see that the market hit our target successfully. This is a classic fractal flow trade using subjective context and objective triggers. If you want to understand more about how you can trade like this, check out the Fractal Flow Strategy video course in our strategy store. If you enjoyed the video, please don't forget to click the like button, subscribe to the channel and to leave your feedback below in the comment section. Thank you for watching.